Alright, but today is the 18th of July, being a Saturday. This video simply just going to be doing a trade analysis for the two trades I took on Friday, which was the 17th of July. So in relation to the economic calendar, there was no high impact news on that Friday, but two trades, one taken during the New York AM session and New York PM session. So the first trade would have been Inception continuation model, and then the second trade would have been Inception model. So we're going to take a look at the first trade first. So New York AM was the session. 10 a.m. power of 3 was being framed. Hour 1 SIBI was engaged with, as well as that 10 a.m. opening was also engaged with. Had an M1 standard deviation projecting for sell side in order for us to locate that point of inception for buy side delivery. So that -2, -2.5 is engaged with. And then entry mechanics would have been 15-second reclaimed BISI and M1 and M5 change in staying delivery. And then M1 body and wick standard deviations projecting for buy side in order to locate targets and exits. And then ultimately midnight opening was the exit, and then the hour 4 SIBI was the drawn liquidity. So if we just take a look at the execution, added into the trade, we had that previous week low, which is where we exited out of, which was in alignment with that midnight opening. So that previous week low, midnight opening, were sitting right on top of each other. So if we were to just observe this segment of price action, there would be a cluster of PD arrays on top of each other. So we have the consequent encroachment of what would be the opening range gap for that Friday's trading, and then we have a pool of buy side here, and then you have that previous week low, and then there's also the midnight opening. So we have this hour 4 SIBI, which was the drawn liquidity, and then we have that 10 a.m. opening in which we were framing that 10 a.m. power of 3. And then on the hour 1 chart, we have this hour 1 SIBI, which was engaged with. And then we can also take an acknowledgement as to how this 11 a.m. candle delivers under that 10 a.m. opening. So this hour 1 SIBI, 10 a.m. opening was utilized for that buy side expansion towards this hour 4 SIBI low. And then dropping down, taking a look at the M5, the only thing that we're really paying attention to here would be the M5 order block. So we have this one down close candle engaging with this pool of sell side right here, and then we have closure above it. This would be your M5 change in staying delivery, the formation of your order blocks. We also have a equilibrium cracking correlation. So we end up seeing that ES delivers into an equilibrium of this respective range on NASDAQ, while NASDAQ fails to deliver under its respective equilibrium. That is a form of cracking correlation. And then dropping down onto the M1, a bit more descriptive price action. So we have this deliverance down into this hour 1 SIBI, as well as engaging with that 10 a.m. opening. So if we're to observe 10 a.m., we end up taking a notice to the fact that 10 a.m. opens and we immediately begin delivering towards buy side. So we never deliver under that 10 a.m. opening after 10 a.m. opens. So we have this deliverance down into the hour 1 SIBI, engaging with that 10 a.m. opening, cracking correlation with the equilibrium. And during this deliverance, standard deviation can be anchored from this candle's high all the way down to this candle's low, -2, -2.5, projecting for that 10 a.m. opening, as well as the hour 1 SIBI. So this was the standard deviation projecting for sell side in order to locate that point of inception for buy side delivery. Now, what we actually end up having here inside of this hour 1 SIBI is the distortion of price and the distortion of time. Now, the first 14 minutes were the distortion of price because it's time for price action to begin moving here. In terms of our key time window is in motion while price action is here, and once that key time window ends, it now becomes the distortion of time in terms of prices waiting for a certain time before it can begin its deliverance towards buy side. So point of inception ends up establishing itself late. It's outside of the 30-minute window, and the time that price action is waiting to begin that expansion towards buy side would have been this 11:30 mark. So this was merely just the consolidation of orders, and then we move into the next delivery phase for expansion once that 11:30 mark happens. So that would be what the distortion is simply just waiting for. But during this distortion is the accumulation of orders. So long positions are being accumulated while price action is sitting inside of this hour one SIBI. For one, we can take the very obvious acknowledgement as to how respective the bodies are being in relation to this hour one SIBI. They're sitting very nicely inside of it. We're not seeing any closure when it comes to closing outside of this hour one SIBI. So the bodies being very respective, as well as the fact that signatures are being presented in price in terms of we're not willing to displace below this 10 a.m. opening. We have an equilibrium cracking correlation, and then we also have a liquidity cracking correlation. So YM fails to engage with this low, while ES and NASDAQ end up engaging with this low. Now, in relation to cracking correlations, divergences, inter-asset relationship, that is the next video for the inception model. But what we end up having on the M1 is we engage with this pool of sell side, and then we have a change in stay in delivery. Series of down close candles, series of up close candles. Ignoring this candle because it's an indecisive candle. So we ignore it within the sequence of the formation of your order block. And standard deviation would have been anchored from this candle's close all the way up to this candle's open. That would be the body standard deviation, which gives you that -2, -2.5, -4, -4.5, projecting for this high. And then the wick standard deviation would be anchored from this candle's low all the way up to this candle's high. You have that -2, -2.5, -4, -4.5, projecting for that hour 4 SIBI low. And then dropping down into the 15-second chart, the only thing that we're really paying attention to here would be the reclaimed BISI. So it'd be this BISI that resides right here. So with this segment of price action, what we end up actually having is a cracking correlation establish itself right here. And this would be a change in stay in delivery. This would be your formation of an order block. But we don't end up seeing it being utilized in an efficient manner. The reason why that we don't see this being utilized in an efficient manner is because there's an underlying objective in price, as well as the fact that this is a 15-second time frame. There is a hierarchy when it comes to the time frames. The higher time frames are always going to parent the lower time frames. So essentially, it does not matter what the lower time frames are telling us to a certain extent. If we're framing a higher time frame idea and we're aligning it with the lower time frames, then it does matter what they're saying. But if we have no regard for what the higher time frames are saying, the lower time frames mean absolutely nothing. There's no significance behind whatever the lower time frames are saying if there's no higher time frame narrative to back up what they're saying. But this would be the reclaimed BISI, and we end up seeing that once it's closed above, it's then utilized as support. So it would have been this candle that executed off of, and we close above it on this candle, utilized as support. We see no body candle closure outside of it, below it, once we end up closing above it. So that would have been it for the first trade. So once again, just to take a look at the executions. So this entry would have been off of the 15-second reclaimed BISI, and then these two entries would have been off of the M1 and M5 change in stay in delivery. And then lastly, jumping in, taking a look at the New York PM trade. So this was an inception model. The difference between inception continuation and inception model is, well, the very obvious thing is that inception continuation is a continuation model. But in order to identify the difference is we're continuing the order flow that is apparent here. Inception continuation is technically inception as well because it's going against this state of order flow, but we're continuing this state of order flow. This is inception, and I'll actually speak on this one. I actually missed this entry. Limit just simply did not get tagged. This is inception. This is pure sell side delivery. We're going against that. This is inception continuation because we're aligning ourselves with this state of delivery. Expansion, retracement, expansion again, following our delivery phases. And this would be inception because we're going against this state of delivery right here. Overall, this entire state of delivery. The reason why you can still deem this inception and inception continuation is because if you're looking at it from a lower time frame perspective, this is technically going against this state of delivery. But when you bring higher time frame perspective into play, we're aligning ourselves with this expansion. But anyway, the New York PM trade inception model would have been taken during the New York PM session. Hour 4 SIBI low was engaged with, the New York lunch high was engaged with, and then I had an hour 1 and M5 body standard deviation, both projecting for buy side, and both of their -2, -2.5s were engaged with, and then an M1 standard deviation projecting for buy side in order to locate that point of inception for sell side delivery. M5 rejection block was engaged with. Entry mechanics would have been a 15-second and M1 change in stain delivery, as well as a 15-second inversion for a value gap. So added into the position, and then M1 and M5 body and wick standard deviation projecting for sell side in order to locate exits. And then I had a low risk sell standard deviation projecting for sell side. So the -4, -4.5 of this low risk sell standard deviation was the exit, and then ultimately the New York lunch low was the drawn liquidity. So taking a look at the position, we have that hour 4 SIBI being engaged with and utilized all 3 entry mechanics that we just went over here in the trade. So we're about to take a look at those entry mechanics right now. And so taking a look at the hour 4 chart, we have this hour 4 SIBI low that was engaged with, and that is where we located that point of inception in terms of the higher time frame PD array that was engaged with. And then when we take a look at the hour 1, we have the hour 4 SIBI low, and then we have the hour 1 body standard deviation. So anchored from this candle's close all the way to this candle's open, that is your body standard deviation. We see that -2, -2.5 projecting just above the hour 4 SIBI. Dropping down onto the M5 chart, body standard deviation projecting for buy side. So from this candle's close all the way to this candle's open, standard deviation anchored, -2, -2.5 projecting for that hour 4 SIBI low, and is in alignment with the hour 1 standard deviation that we just took a look at. Now, in relation to this standard deviation, one could argue and say that shouldn't it be anchored to this candle's opening? Since this is an indecisive candle, we're ignoring it within the sequence. This is your formation of an order block. We have a series of down close candles. Indecisive candle, we ignore it completely. Series of up close candles. M5 order block also engaged with it for that inception continuation model, but I was not paying attention to the M5 order block. But this is your M5 order block. The reason why I'm not looking to anchor the standard deviation to this candle's opening is because this is 9:30's opening. So this is a time-based standard deviation. And honestly, I should have just specified that when I was doing the analysis here, but it's a time-based standard deviation. This is your 9:30 opening, and it offers a leg for us to anchor a standard deviation to project for either buy side or sell side, in this case being buy side. Time-based standard deviations, very, very powerful. Asia, London, New York PM, New York AM, as well as key time opening standard deviations, very, very powerful because they're going to identify areas in price that are going to serve as significance once they are engaged with. But body standard deviation, time-based, 9:30 leg projecting for buy side, and then where we ended up engaging with price, we had a wick-based standard deviation. So from this candle's high all the way down to this candle's low, -2, -2.5, -4, -4.5, which is where the day ends up fizzling out. And then body standard deviation simply just anchored to this one up close candles. So from this candle's opening all the way up to its close would be where the standard deviation is anchored to. And then M5 rejection block engaged with. When it's engaged with is what's important. So we end up engaging with it here, we end up engaging with it here, but we end up engaging with it again during that New York PM session. So time is being involved. There's an element of time that is brought into play. So we end up seeing 13:30 engaging with that rejection block, and then it invites for that sell side delivery. New York lunch low inside of the wick standard deviation, -2, -2.5. And then taking a look at the M1, a lot more descriptive. So the trade that we just went over, the wick standard deviation that we had anchored from this candle's low all the way to this candle's high, still in motion. It's still being used, and it's used effectively in terms of that -4, -4.5 is where we end up having that point of inception. I've said it before, I'll say it again, I'll continue to say it. Where you find inception, you find terminus, and where you find terminus, you find inception. This is a point of inception, which means it was terminus for a previous move. A move ended here. This is a point of inception projecting terminus to be up here. So this move is going to end here, and a new move is going to start right here. This is dictated by our standard deviations. We know that that -4, -4.5 is the end of a move. It is terminus, and it is time for a new move to begin. And that new move begins if it's aligned with an underlying objective as well as higher time frame order flow. I haven't touched it yet, but there's this standard deviation, -4, -4.5. You could say, oh yeah, this move has ended, now we can continue going back up. There's an underlying objective. We're seeing this M5 that is showing us a point of inception, saying we want to go and engage with the New York lunch low. We have an M5 standard deviation saying that this is going to serve as a reaccumulation, redistribution, or a smart money reversal. We have an hour 1 standard deviation saying the exact same thing. And it's like I said earlier, in terms of there is a hierarchy when it comes to these time frames. The higher time frames are going to parent the lower time frames. It does not matter that this is a -4, -4.5, and we know that it should be utilized as the end of a move turnaround. It's an M1 chart. M5 is saying something else. Hour 1 is saying something else. But we have this standard deviation projecting for this hour 4 SIBI low. We end up seeing cracking correlations establishing themselves in price here. So we have the first stage and the second stage cracking correlation. This high would be your New York lunch high. So NASDAQ engages with the New York lunch high, ES and YM fail to follow suit. Second stage cracking correlation presents itself, and then what we end up seeing, and very important, we should pay attention, this is what it means for the wicks to be doing the damage, however the bodies are telling the story. What we should be doing right now is paying attention to the bodies. This pool of buy side, we don't see any body candle closure above it. We see the wicks displace above it multiple times, trade above it multiple times. What's occurring is simply just the accumulation of short orders. What I'm going to explain here, and now I'm making the video a little bit longer than it should be, but this is an element of your market efficiency paradigm. This is buy side. What resides above buy side are buy stops. Smart money is going to sell these buy stops. They're going to pair their short orders with buy stops. And what is occurring here is the fact that there's buy stops above buy side means that, for one, people are getting tagged out of their trade early. So if they are already short and they have a stop loss at buy side because it's their buy stop, because they're short, if their stop loss is there, they're getting taken out of the trade. Smart money is selling it. And then for two, the other party would have buy stops here, not because they're in a short position, but because they want to buy on a breakout. So they want to buy on a breakout once price action displaces above this high. So they would have been tagged in here. That is essentially what it is. That is an element of that market efficiency paradigm. And we end up seeing smart money simply just selling their orders. And we see price action stall around a bit. We're waiting for time. 13:30. That is all we're waiting for, being that the start of our New York PM session. That is quite literally all we're waiting for. But cracking correlations establishing themselves in price, and standard deviations would be anchored from this candle's high all the way down to this candle's low. You have your -2, -2.5, -4, -4.5. And then once we reach that New York PM opening during this candle right here, we end up having closure below it. This would be your M1 order block. Price action engaging with that M1 order block, again paying attention to the bodies. We're not seeing any candle closure above this M1 order block. Bodies are being very, very respective of it. And then we end up seeing price action continue this deliverance, engaging with this BISI or this SIBI. This is your first presented fair value gap of the PM session, and we see how it's utilized. Again, bodies are now closing inside of it. This is exactly what you like to see if you're in a short position going against the current state of order flow. You like to see these type of signatures present themselves in price to indicate to you that you're on side. Price action is willing to deliver in your desired direction. It may not be willing to deliver to your desired take profit, but it's willing to deliver in your desired direction. And over the course of that deliverance, there's opportunity for you to make money. But apart from that, standard deviation, this would be your low risk standard deviation, which is what we ended up exiting the trade out of. So from this candle's high all the way down to this candle's low, -2, -2.5, -4, -4.5, exited out the trade at that -4, -4.5 level. And then we see price action continuing that sell side delivery. And then lastly, taking a look at the 15 second where two of the positions were added into, observing this segment of price action right here. We have the series of up close candles, a series of down close candles. First position off of the 15 second order block. This is your change in stay in delivery. The indecisive candle right here, as we know, we're ignoring it during this sequence and the formation of the order block. The next position added off of the 15-second time frame would have been off of this 15-second inversion for value gaps, because during this leg delivering up, we ended up engaging with this candle, and the opening of this candle is your New York PM opening, being that 1330 opening. And then we end up having the inversion of this imbalance, and simply just added off of it right there and then, and looked for that sell side deliverance to continue on out. So again, just taking a look at the executions, first one would have been off of the 15-second change in state, second one off of the order block, the M1 order block, and then the third one being off of the 15-second inversion for value gaps. So yeah, that would essentially be it for the executions. And we'll just take a look at the position that I said I was going to mention. So if we drop down onto the M1, this will be very, very brief, but dropping down onto the M1, in fact, let me actually start here. So what we ended up having is engagement with the previous month low. So that is why we had that very, very nice expansion towards buy side, as well as looking to align myself with that buy side expansion, because we're ultimately aligning ourselves with that higher time frame institutional order flow. And by doing that, you're going to see moves like this occurring, very expansive and aggressive moves. This is referred to as a spool. We're not having any down close candles during this run. Even this one, indecisive candle, it's simply just engaging with the breaker block that resides right here, as well as the inversion, and then closes indecisive. So we could essentially just ignore it as well during this run towards buy side. But quickly observing it, so in relation to this position, what I ended up missing would have simply just been this inversion right here. I had my limit on this inversion, wanted to get tagged into it, but price action fell short, and was ultimately going to look to target this segment of price action right here. So we see these highs residing here. This high falls short of engaging with it, so looked like very appealing price action to look to deliver into. But apart from that, we end up seeing price action failing to engage with it, being this inversion right here. What it does end up engaging with would be the breaker block. So these two up close candles, this would be your breaker block. And if you're watching this video, you're not familiar with the PD arrays or some of the things I'm speaking about, simply just go and tap into the Inception model series that is currently dropping. But what price action ended up engaging with is the breaker block, and then we ended up having that expansion away, as well as this SIBI right here. We end up seeing price action engaging with it, being very respective. It was utilized as resistance once to displace below this low, which is why I was looking for this one, because as well as this is valid, you can execute off of, okay, this is annoying. You can execute off of this SIBI, more than valid 100%. I simply just wanted this one because this SIBI was utilized as resistance to engage with, for one, this swing low, and then this SIBI was displaced above. But yeah, that would have been it for this position. Of course, standard deviations are always going to be present. What we end up having is a 930 leg body standard deviation. 930 opens here, delivers up towards buy side. We have closure back below it, series of up close candles, series of down close candles. We're looking to anchor it to the bodies, -2, -2.5, and that is what serves as the smart money reversal. If we're to study the day on a further level, if we drop into regular trading hours, this is what you are presented with in terms of the gap that price action has to trade into. 930 opens here. The Thursday previous settlement closing was right here. Very large opening range gap. And with the idea in mind that we've just delivered into the previous month low, which is a respective monthly BISI, we're aligning ourselves with a higher time frame institutional order flow. There's a cracking correlation present. There are standard deviations in price signify, I don't know why this chart, okay, it's 1 hour. There are standard deviations in price signifying that this segment of price action is going to serve as a point of inception, being the standard deviation right here. With all of that in mind, and then you see what the intraday framework offers you, it becomes very blatantly obvious and clear. These things are set up ahead of time. You can see these things ahead of time in terms of the day has been primed in a manner where it invites for just this type of buy-side delivery. key word being invites. So you have this very large opening range gap. And this gap can be layered out in quadrants. Again, if you're not familiar, simply just tap into the Inception model series. But what we end up seeing is how the quadrants of this opening range gap are being utilized. Consequent encroachment utilized as resistance. We deliver under the lower quadrant, see the accumulation of orders under it. Once we deliver above it, we can see how price action utilizes it as support. This is not random. It's genuinely not random. It's very, very nice. Deliverance towards buy side, and then we engage with that upper quadrant, price action, very shy around it, deliverance back down towards sell side. So this is just the opening range gap in terms of a card that was laid out on the table ahead of time. Another card laid out on the table ahead of time, midnight opening. If we are to jump onto the hour chart, and then we simply just anchor that midnight opening. What do we take a notice to? Midnight does not form a high. Midnight just opens and continues the sell side delivery motion that was occurring the previous day and during the overnight sessions. This is simply just serving as a draw on liquidity. Again, this is setting up the day in a certain manner. If we're to drop back into regular trading hours again, we end up seeing where this midnight opening presents itself, just above the consequent encroachment of the opening range gap. And with this deliverance up towards buy side, we fade it. We fade, delivering into a premium of the midnight opening. We know that midnight opening is an interbank price delivery algorithm reference point, being IPDA. We fail to deliver above it. This simply just being the engineering of buy side under that midnight opening, which is why it was very clear to seek that deliverance towards it as for the Inception continuation model. But yeah, that would be it for the trade analysis.